Hi guys, welcome back to my channel. This is Wendy, South Florida. We talk all things South Florida living, real estate market, business, and so much more. Today, I have a guest that you guys have seen before, Todd Hanley with Cross Country Mortgage. Todd, how are you doing today?
I'm doing fantastic, Wendy. How are you?
Everything is great. Everything is great. Thanks for asking. So guys, we're going to get started today. There's so many things going on right now with the real estate market, a lot of uncertainty. And Todd, how are things going on your end? I know you're seeing a lot of crazy things as well too, but it definitely, you're on the opposite side. Me, I'm, what's on the ground.
Yeah, well, I only get to deal with your buyers. I don't get to deal with the homes that you sell. So you guys are definitely having a bit different experience than I am on this side. I think there was some data out yesterday that said mortgage applications are at a 22-year low, which actually kind of surprised me because if that's the lowest it's going to get, it's not horribly bad right now, but it's definitely slowed down. With affordability at, I think, the lowest since 2006, you just have a lot of buyers who are having second thoughts on moving forward with the purchase of a home. So yes, things are a little bit slower, but we're still seeing a very big influx of potential buyers. Yep. Some just a little bit more difficult to get approved, and other ones, once again, just having second thoughts, but still cranking away, Wendy.
Awesome. No, totally. It's definitely different. It's not as crazy as it was over the between the way it was last year as well as the last couple of months. Things have definitely slowed down from what I noticed. Even speaking with some potential buyers that I was working with, and I follow up with each month, some of them are saying that because of the way things are going, they want to just, hold off just to see exactly what is going on because, they're concerned. Then, we having all the questions regarding interest rates, and that's a big one. So as far as interest rates go on right now, what's the update on that?
Well, rates have, I think they've doubled since the beginning of the year,
Yep.
But last month, I think they hit the peak of close to mid sixes, but they pulled back actually a pretty good amount. I think there was actually a record drop in interest rates about maybe 2-3 weeks ago, just from, like you said, all the new things coming out, all the moves by the central banks, the Fed, a lot of recession talk coming right now with things slowing down. So interest rates in the bond market really, they trade into expectations of future events. What's going to happen maybe 6 months, 8 months to a year out. So if the bond market or in interest rates are starting to react to future events, that basically means that there's a potential for a recession coming or maybe some sort of a significant slowdown that the bond market started to reflect. And therefore you have interest rates still higher than the beginning of the year, but definitely pulled back from the highs. I personally think we may have peaked out for now, to be quite honest with you, with expectations of slower growth and a Federal Reserve that's now more in a position to tackle inflation a little bit more aggressively. I think you're starting to see that expectations are for a slowdown in the future, and now therefore rates possibly been coming down about a year out. So definitely some things to look forward to.
I actually agree with you. Matter of fact, today, actually, I got a call from this guy, one of my is actually like a new potential buyer. And he asked me that same question that we keep hearing about. Hey, Wendy, we keep hearing about recession. We keep hearing about all of this that's going on. What do you think is going to happen? And on top of that, do you think the same thing is going to happen that happened in 2008? And, of course, none of us have a crystal ball to predict exactly what's going to happen. Of course, doing the research, looking at all the data and everything, it definitely, based off my personal opinion, suggests that it's not going to be to the extreme of what we experienced in 2008. Of course, as we mentioned before, a lot of changes have been, made, and a lot of rules and regulations have been put in place to avoid something like that from happening again. So no, I do not foresee it happening like we experienced in 2008. I do see that things are slowing down a bit. I've also witnessed some price reductions, but we're still experiencing multiple offers. I'm still dealing with multiple offer situations. So it's definitely a different market, and there's a lot of things that are going on in different directions. And a lot of buyers they don't know which direction to go to. They don't know where to go or what to do. And that's why it's up to us, the experts, to help guide them and help them to make the best decision. So what advice are you giving to some of the buyers that you are working with right now?
Well, I mean, the bottom line is it really boils down to what someone's individual goals are and what they're looking to accomplish through homeownership.
Hmm.
If you have somebody who's looking to maybe get out in a year and maybe take advantage of appreciation, that might not be the best market for them, because I think the latest calculations were for about this time next year for appreciation to be at about 5%. So with someone putting down a minimal amount of money, their break even period with closing costs and down payment will be a little bit extended. So those with a shorter time frame horizon and goals, I would say this might not be the best time to purchase for you. However, for someone looking to, purchase a home for their family and to
Or even
build
three to
wealth.
5 years. Yeah.
Yeah,
Mhm.
exactly. I mean, this is a prime market for them. I mean, we still have stable appreciation. I mean, interest rates, yes, they've doubled since the beginning of the year or close to it, but they're still at historic lows.
Right.
So, once again, affordability has gone down, but as long as it makes sense for that particular individual and their goals and everything lines up, and I feel comfortable with everything they've told me, I will definitely recommend for people to move forward. But if someone, once again, if their goals aren't aligning with what I'm seeing, I would sit on the same side of the table with them and consult with them and let them know this is what you're up against and this is what you might experience if you were to sell in a year or two versus holding a little bit longer. So
Yeah. No, damn. I said, damn. Meant to say exactly. I totally agree with you on that for sure. If you're not in a financial place to go ahead and make that purchase, if it doesn't make sense, don't do it. Of course, there are some people that feels like, you know what, maybe there's still time. I can just purchase something and go through with it and do what I need to do because of the fear of missing out. But honestly, if you honestly believe that it's not the right decision for you or financially, or if it doesn't make sense, you don't want to get stuck in something that you can't afford. So my advice is definitely if it's not the right decision for you, don't force it
yeah,
because there's some uncertainties right now. If you know that you can afford it, you plan on staying there over the course of the next couple of years, then yes, absolutely. And I'm not one of those agents that's just going to go ahead and just have a buyer, oh, just go ahead and purchase just for me to make a commission. No, if it doesn't make sense, then I'll definitely advise them otherwise. And at the end of the day, they can make their best decision to see what works best for them, for sure.
yeah. And that's one reason why I actually enjoy working with you too, because you do
Thank
take
you.
the honest approach and you sit on the same side of the table as your clients, and you're not just looking for a commission. You're looking for a long-term relationship to be their
Thank you.
forever agent, not just the one who sold them that house 2 years ago, So I love that about you.
Exactly. Thank you so much. Same here with Cross Country Mortgage. I know you guys have always continued to go above and beyond for all of your clients, for sure. And that's, what I strive to continue to do and provide exceptional services. You guys go above and beyond. But one question I do want to know, I've been hearing a lot and been seeing a lot because of the new construction loans currently right now. I do have an uncle that is in the process of, we should be closing sometime next year, right, on a new construction build in Port St. Lucie. And he has excellent credit, great income, everything. But then again, you have some people that are, that feels like, okay, you know what? At the beginning, I was at what, 2%, 2.3% or what have you. Now, they're like, what am I going to do? The interest rate's so high and they want to get out of those contracts. But if they get out of those contracts, they can lose their escrow deposit. So you have a lot of concerned buyers right now that are going through that process with new construction built in that process. And odds are the builder is not going to just cancel you out of that contract because you're like, oh my God, the interest rates are significantly high now, because it's insane. Have you been seeing anything like that, or some buyers that are calling you because they're concerned regarding the working with lenders and the new constructions and the mortgage rates?
Well, it's actually, I've heard things on the other side, actually. So builders, and I'm not sure if this is in Florida, but I heard an instance where a builder actually canceled the contract on the buyers because they saw that the price is so much higher now and they can get a higher purchase price for the house,
Really?
that they were canceling the buyers and putting it back on the market. Yes.
Oh my gosh, that's a total nightmare waiting to happen for
It's
one.
just greed in its finest, right? And it's unfortunate people have to experience things like this. But one thing buyers can do going into a situation where they have a long-term contract with a builder is to disposition in the contract that I'm only going to pay this certain interest rate, right? So the interest rate, let's say you're only going to buy at 4%, but yet interest rates go up to 4.25, 4.5. Now you have protection to get out of that contract. And in a rising rate environment, that's definitely an aspect of the contract I would take advantage of as a buyer, because you're simply protecting yourself. Now, most contracts, if you're buying an existing home, you very rarely see any type of interest rate protection, because over 30 days, you're not really expecting rates to double. I don't think it's ever happened. But in a long-term, contract time frame, like a new build, especially with their supply chain, delaying the actual process, buyers are really susceptible to not even being able to afford that home. So that interest rate protection on the contract is definitely a high recommendation for someone going into that long-term contract. But yeah, it's an unfortunate experience for a lot of people. I mean, just imagine, right? Your payment's going to be $2,000, and now it goes up to $2,700.
Yep.
I mean, it's quite unfortunate for people, but yeah.
It really is, for sure. And, of course, just because you're purchasing in a new construction community doesn't necessarily mean that you have to go with their lender. I mean, you still can shop around and work with others. I know at times they may offer some really great incentives, but you have to definitely make the best decision for you. I was at a new construction site this past weekend, and they're offering like $10,000 incentives towards closing costs. And whether you want to use it towards closing costs or even use it towards some upgrades or anything like that. So there's a lot of builders right now that are offering different options because, things are slowing down. A lot of buyers are starting to feel otherwise and not know what to do. So there's a lot of uncertainty right now and a lot of confusion.
And remember too, when things were at the peak, late 2021, the builders were no longer providing those incentives because it was a supply demand issue. Like, we have so much demand, we don't have to hook you up with a big discount on your closing costs or give you a big credit. But now, like you said, with the market shifting, you're starting to see them get a lot more aggressive with their incentives. And, Wendy, I think we've had some clients before that have gone into a new build. And, the bottom line is I will always be a consultant for them. It doesn't make a difference to me if they use, ABC lender or myself. I want to make sure that your clients are going to be in the best position possible. But with a new build, sometimes, I mean, hey, let's face it, the agent, the builder, everybody teams up to give a big discount. And sometimes it's the best position for the buyer to be in. So at the end of the day, if they're getting a much better deal, I would just rather consult them and advise them, say, hey, this is how, you have a better, more advantageous setup with the builder and their lender. And I think, but it's usually only in those cases when you're, so.
No, totally. Now, so what exactly do you think are going to actually happen with the interest rates? With, the media and YouTube and these articles, everything, it's nothing, everyone has a different opinion of what they think is going to happen. Then everything regarding the Fed, it's just to the point that the great thing is a lot of people are starting to be informed, because when have you ever seen people actually like asking questions about, oh my God, what's going on with the interest rates and wanting to know more and everything like that. So that's the great part about it. But with, seeing these YouTube videos or seeing these articles that saying, oh my gosh, everything's going to crash, it's going to burn, what is going on? Inflation. It scares people off and say, you know what, I don't want to deal with this right now, or let me just wait. But then again, you're dealing with a lot of landlords that are selling their home and want the tenants to leave. The tenants may not qualify for, to buy, or what are they going to do? It's to the point that definitely be careful what you read. You can't believe everything that you see out there, for one. Two, as I mentioned before, having a trusted advisor, someone that can help you make the best decision, is definitely important. And three, it's to the point that if you are afraid about taking that leap of faith, then you have to weigh your pros and the cons to see what would be best for you, yourself, and your family. 100%. At the end of the day, thanks, Todd, for being my go-to source, for sure, because that has always definitely helped me. But I just want to go above and beyond and provide that service to all of my customers. But that brings me to, of course, with the interest rates and everything like that. But what I want to know from your point of view is, what kind of advice do you have some sellers that are considering selling right now? Because they're still, I mean, the inventory has increased. There's a lot of people that are putting up their homes up for sale right now. The numbers are, although it's still low, but there are a lot of sellers out there that are I'm seeing a lot of homes that are coming up for sale right now, right? Which can be a good thing for some of these buyers that dealt with the multiple bidding situation and that gave up. So that's great for them on that end. But what advice do you have for some sellers right now? Are you going to tell them be realistic? You can't price it too high like it was before and see what happens. Right now, it's you got to be realistic. So what do you think?
Well, once again, I think it just ties into everyone's particular goals. I mean, I speak to a lot of people who are selling right now, but they're not actually buying for the next year. And I asked them, why are you selling? Like, what's your incentive? And they said, I can't look at all that equity that could potentially be mine and just let it go away. So
Mm-hmm.
they want to access the equity that they've gained over the years of homeownership. But I see a lot of people that it's like they got their number, right? It's like they didn't plan
Right.
on selling, but one day they're like, oh, wait, I can get 900,000 for this house. I owe 300. That's a lot of extra money I can put in
Mm-hmm.
my pocket.
Totally.
And kind of touch on too, a lot of people get sucked into the headlines. Remember, headlines sell advertising. And so you have a lot of news sources that create these fear-ridden headlines, and people, a lot of people don't actually read the article, they react to the headline. So some people get caught up in these news stories and they make these life decisions based off of, maybe just a headline that might cause them to sell. But the bottom line is they really have to make a big decision and evaluate their financial situation, their goals, their long-term goals for them and their family, and see, does it make sense to go and sell right now and then wait another year? I mean, why are they waiting a year? Do they think the market's going to crash? Because if they do, and the market goes up another 10%, then are they in a better position, or are they in a worse position?
Mm-hmm.
So I just really feel that people need to dig in really deep and really evaluate their decisions to the fullest extent and speak with professionals like you and myself to just evaluate and see what all the different possibilities are and what all the different outcomes are, and then make a really good decision. But don't just make a decision based off headlines and what you're seeing on Facebook or Instagram, because like I said, there's a lot of talking heads out there. A lot of people just want to get advertising dollars
Yep.
and create these fear-ridden headlines. And unfortunately, people react off that. So the bottom line, speak with professionals, evaluate all of your options, keep an open mind, and then make a good decision. Don't just jump into it.
Definitely. Now, I know with everything going on with the Fed, some people have brought up about the basis points and everything like that. So even with last week with the CPI index, can you let the subscribers know? Because a lot of them, as they're reading this, it's so much information that they just don't know how this impact them into any of the decisions that they make, because they want to know what's going on. But some people don't even know what exactly is a CPI index or what exactly is going on with, the basis points and everything like that. These are terminologies that we hear and we may talk about daily, but a lot of the subscribers or the viewers may not understand how that can impact them, whether it's good or bad.
Well, I think everybody's experiencing the inflation. I mean, there's no doubt. I mean, food prices, energy prices, gas prices, housing. Housing is probably one of the biggest contributors to inflation. I think
Totally.
everybody's feeling it, but the CPI, it's the Consumer Price Index, and it basically measures all the individual things that we spend money on a monthly basis. And yes, it's been creeping up pretty quickly. I mean, we're at 9.1% was the most previous reading. So anything you bought last year, not anything, but just a general measurement, has increased on average about 9.1%. That's a pretty tremendous amount, especially for retirees who are on fixed incomes, or, my heart goes out to families, single moms, I mean, who are just experiencing all these different increases. I mean, it's a really tough time. But what is happening right now and what the Fed is trying to do to tackle this inflation is they're getting really aggressive with increases. So 75 basis points, which is 0.75%, is how much they increased the interest rate last month. And they're also going to do it again on Wednesday, the 27th.
Mm-hmm.
So what that does, it increases short-term interest rates, and it actually crimps demand. It kind of crushes demand and slows things down. And the slower demand gets, then hopefully inflation will subside as well. But there's a lot of contributing factors. You have the supply chain issues and just a tremendous amount of pent up demand. So you have a lot of people or a lot of money going after very few amounts of things, and that's causing higher prices to take place. But now you have a lot of recessionary signals out there right now. So the Fed's actually watching this very closely as well. Yes, they're probably going to increase 0.75%, but they're starting to see potential signs of slowing down. So that could be a good sign because they might not have to increase as much. Inflation should start to subside. Obviously, there's no guarantees, and we'll see how long this crazy game goes on. Hopefully, not too much longer. But it's really just quite a precarious time in the United States economy. I'm just really hoping that things don't get too out of control with inflation. It doesn't get too embedded in the economy. But forecasts are for it to start subsiding within like a year or two. And once again, hopefully we won't get too deep down the rabbit hole with the Fed getting very aggressive and having to slow the economy down too much. I've also read a lot of things actually that there's, you remember during COVID, right? You weren't driving anywhere, you weren't going anywhere,
Right.
You weren't eating out. People saved a lot of money.
That's
so
true.
there's a lot of money, trillions and trillions of dollars in savings that's still sitting in people's bank accounts.
Yep.
That should be a good cushion for a potential slowdown. And I keep reading more and more about it, that really could help stave off a recession or just a major recession, right? So I'm remaining optimistic. We don't want things to get too bad, obviously, but we do want rates to come down. So once again, it's a precarious time.
I definitely tell a lot of my family members or friends or anyone that asks right now, the way things are going, I always tell people, make sure you're just saving. You're not just blowing your money on unnecessary items that you really don't need. Do you really need that bag, that designer bag? Do you really need those pair of heels or those sneakers right now? Like, really weigh your options and check your finances and make sure that you're in a place and have an emergency fund in case anything happens. You should be saving your money and planning and budgeting anyway. But I'm just saying right now, like even pumping gas, right? My gas, the last couple of weeks I've never paid that amount of money for gas, right? Going to the groceries, going and getting like 10 items, I'm spending like $250, $300, and I'm getting home wondering what exactly did I buy. It puts me at a point where I'm like, oh my God, I'm spending my money. Money's coming out so fast and so much, and makes me worried. Even someone like my father, he's been working in Palm Beach County for the past 35 years, right? He lives in Miami. So he's driving 6 days a week. Wow. And he called me. He's like, Didi's my middle name, what my dad calls me. He's like, Didi, it's the amount of money I'm spending on gas, working 6 days a week. It's so much. Like, it's a lot. I'm going to have to see, should I get on the tri-rail, or should I do this or should I do that? I'm like, okay, maybe park one car at the tri-rail station and park another in the Miami station. We're trying to figure out different ways around it because of how expensive it's getting, and a lot of people are suffering because as things continue to climb, and less money is coming in, or it's not meeting it to where it needs to be. So that's what's going on. But for him, it's things like this that makes me worry about him, because that's a lot of money coming out of his pocket, with everything.
Yeah,
that's just my 2 cents personally. But other than that, we're going to definitely stay tuned and keep our eye out on the market and inform you guys of what's going on so that you guys can make the best decisions and keep you guys informed and updated. So definitely, Todd. So Todd, what are your overall predictions with everything that's going on? And you don't have a crystal ball, none of us do, but for instance, like next year, 2023, 2024, what are your thoughts on, inventory, of course, the housing market and inflation, everything that's going on?
Well, I mean, there's a lot of predictions for, once again, things just to normalize, right? And I think, granted, we all really enjoyed the increase in business and working nonstop, and things were really, really quite intense. However, normalizing is just means that, we're going to go back to a regular market where there's not going to be, 50 cars lined out for an open house.
That's the
because that's the only house that's available, around for the next 2 miles around.
Mhm.
You'll probably see, a lot less purchasing over above the asking price, a lot less competitiveness. Maybe we'll shift into a buyer's market, which I believe the true definition of that is 6 months worth of inventory. Some data came out yesterday that I believe South Florida actually had a decrease in inventory versus the rest of the state. So it seems like everybody wants to be in South Florida. I mean, it's
South Florida
amazing.
and Tampa and Miami, I saw was on the list as well too.
Yep. Yeah. Tampa's been blowing up, but I would just say we're just going to normalize. I don't think we're going to have a crash. I think, we're going to have average appreciation of 3 to 5%, and just, maybe tip into a buyer's market. I mean, I don't think there's going to be, I don't know where this huge wave of inventory is going to come from. I really don't. I mean, to get up to 6 months from where we're at right now is going to be a tremendous change.
Yeah.
I mean, National Association of Home Builders just came out. Their sentiment was the lowest in quite some time, a couple of years. And I think the decrease was actually a record decrease in sentiment. So without them pumping out new homes and building new inventory, and existing folks who have low interest rates, without them listing their homes, I mean, it might be challenging to get up to that 6 month mark. But at the same time, we're definitely going to have an increase in inventory and things will slow down and just more normalized. So that'll be good for buyers because they won't have to be so stressed out and, using all these different tactics and ways to just get their offer accepted. So,
yeah, I also read about the simple fact that now a lot of buyers are starting to, put back that appraisal contingency back in there, right? And the inspections. Remember, during that whole frenzy, people were waiving the inspection period and the appraisal. So and for me, to be honest with you, I was still going that appraisal route and telling them absolutely do not waive the inspection period at all, because you're putting your escrow deposit at risk. So I'm glad that the way things are going, it's to the point that, like you mentioned, it's normalizing, right? Slowly but surely, it's starting to normalize. And I always say, never ever waive your inspection period or the appraisal, because even submitting an offer last week, they said, you know what? Yeah, we're not considering any offers if there's any contingencies or anything like that. We're just not going to consider it. I'm like, okay. I said, okay, well, what do you want us to do? I mean, the buyer wants to make sure that they're protected at all costs, right? And if I'm representing the buyer, I want the best for them at all costs. I'm not going to, screw the buyer over just to make sure to make a deal. Absolutely not. So if they're not willing to consider that offer, then simply have to walk away. But I'm glad that things are starting to change in that sense, because it was getting crazy. People that was submitting offers over $50,000 or $100,000 over asking, or people, like I read online about them naming, the weirdness of the submitting the offers to get offers accepted. We're not dealing with that to that extreme as it was before. I'm not experiencing 20, 30 offers or 15 or anything like that. Now it's more like I'm competing against 2 or 3 buyers.
Yep.
Offers. So things are definitely shifting. They're changing. So to all the buyers, definitely keep hope alive. Definitely, because things are changing. And to the sellers, if you don't have to sell, if it's not something that's extremely urgent right now, then don't bother selling. That's just my advice. So Todd, any last minute say so? Anything else that you'd like to say to all of our viewers?
Not really, but I mean, we're all experiencing the same things, right? Recession, inflation, slowdown. It's just, we're all seeing the same stuff come out. But the bottom line is, we both love what we do. We love helping people. And, it's just really important. I talk to people all the time that have these unfortunate experiences, not working with the right team. When you're out there, shopping for your mortgage lender or shopping for your agent, ask them the right questions, make sure they have your best interest at heart, make sure they're experienced and want to go above and beyond for you, and make sure you have the best experience. That's about the tidbit of information I want to leave, because there's a lot more competition right now, because things have slowed down. Everyone's out there, everyone's hungry, they want to get your business, but you always have to make sure you're doing your due diligence to make sure that you're working with the best people, because real estate transactions are usually the largest, most significant people make. You want to make sure you have the best team behind you.
Absolutely. Couldn't have said it better than that. Guys, definitely thank you so much for watching. Don't forget to subscribe. This is the market update with Todd Hanley, Cross Country Mortgage. And this is Wendy, South Florida. If you guys have any questions, feel free to leave a comment down below. I'll also leave Todd's information below if you have any questions, whether you're considering buying or even if you simply have any questions about the interest rates, feel free to reach out to Todd Handley. I'll be more than happy to leave his information down below. And until next time, guys, this is Wendy, South Florida. Peace.
Thanks, Wendy.
Thanks, Todd.